You were listening to chartingwealth.com for Thursday, the 12th of May, 2016. We are back in the office traveling the last couple of days, and it is not easy to do this on the road, but glad to be back home. IYY is the Ishares Dow Jones U.S. Total Market Index Fund. It's an ETF. It tracks the whole market. What do we see going on? Well, we see the market down over the course of the day 0.94%. Our Heikin Ashi type of candlesticks show us the market tracking upwards as far as the candlesticks go. That is, again, we do have a great study on that for you. It's spelled Heikin, Heiken -Ashi, ASHI. It means average pace. It's calculated differently than your standard candlesticks. It helps us see the mood of the market and what it's trying to do, even though the price had dropped 0.94% for the day on the total market. We can see the market more than anything sliding sideways as this second candle starts forming. And again, it is a two-day candle. The first day of the two-day candle formed on Wednesday the 11th. We continue to see the derivative oscillator down and the MACD below the signal line actually diverging further from the signal line. The MACD is the moving average convergence divergence indicator. So if we look on the 4-hour chart to see what happened intraday, you get a better feeling for what actually is going on and why the Heikin Ashi is still up. Why? Well, that is because the market was up significantly back on Tuesday the 10th and then was down for the day, but all of that down movement was well contained within the up candle in the afternoon on the 10th. That is the reason that we don't see a sharp down move in the Heikin Ashi. We do see now, this is what we've been looking for, okay? We had the crossover going up. We're waiting for the confirmed crossover to go down to crossover on the 4-hour chart. We had a confirmed crossover going up in the morning of the 10th. We're waiting for a confirmed crossover going down so that the short chart parallels the larger chart in its down move, which it's already in. When that happens and we have another rollover, if we have one, that is the time we get in to be able to ride the down move. Now, it is made not as comfortable because we violated our two-day trend line, but we may have a new trend line that forms. We shall see. Confirmed down move on the large chart. The short chart is still backing up, but appears to be moving toward a further down move. So we shall watch. Now, let's look at what happened during the course of the day on the S&P 500. It was down exactly the same amount as the total market, 0.94%. The chart looks very similar. Derivative oscillators continue to gain downward energy. The MACD has moved away, diverged from the signal line. We have a break, of course, that happened on the last two-day candle that ended up finishing its move on the 10th, which was Tuesday of the current week. So we broke through our two-day trend line. What we want to look for, though, is our intraday movement. What do we see happening intraday? We had down movement in the morning, and we had more down movement in the afternoon. It does appear that derivative oscillators losing energy on the short chart, and hopefully we're looking for a crossover going down. Hasn't occurred yet. Pay close attention if you're interested in getting into a down move. Now you say, wait, what is a down move? Why would I want to buy something that's going to go down? Because we look to make trades, investments, when the market's going up or down. We had a hard down, and if we see that paralleled in the short chart, SPY, what's the opposite of SPY? The Standard & Poor's 500. Well, there is a fund, and there are others, but there's a fund by iShares called the Ishares Short S&P 500 ETF. It goes up when the market goes down. Isn't that interesting? It's an inverse fund. So there are ways, if you're sophisticated enough, to make money when the market goes up and down. So the short fund is the way to do it when the market's going down. Now, again, we're not a stock calling service. We are not in any way telling anyone to go out and buy or sell anything. We're an education firm. We always tell you, we say over and over, we need you to open an account at any of the online brokerage firms, set up for yourself a virtual account. Okay? You can become a virtual millionaire by just depositing $1 million virtual dollars in your account. Then you can start practicing what we talk about. And only after you become very adept at doing it can you make up your own mind if you ever want to get in the market. That's your decision. We do not make calls. We are not paid to make calls. We are not a stock calling service. We don't give investment advice. We're a firm that educates and teaches the value of being able to read a chart and be able to hopefully forecast what the market will do, or particular markets, particularly the three that we look at. But that's all we are as an education firm. We are not giving you any advice whatsoever in the market. So we are waiting for the rollback to end on the S&P 500 as depicted by SPY, and for it to cross back over going down on the short chart to find an entry point. Now, lastly, as far as our indexes go, we're going to look at the Qs, QQQ, which is the NASDAQ 100. It also was down for the day 0.90%. Again, we see on our 2-day candle an up move. Again, these candles represent 2-day movements that we're talking about right now. The derivative oscillator has lost energy. Unlike the others that we saw, we also see that the MACD and the signal line are not as far apart, well, as one might have expected. And it could be, well, they seem to sort of be paralleling each other on down moves. So again, 0.90%. If we look at the 4-hour chart, what do we see? We see some down movement in the morning and then more down movement, a spinning top, indecision in the afternoon. We don't see much of a rolling over of the MACD coming toward the signal line. Derivative oscillator did lose a little bit of its upward momentum, not a lot. So again, keep watching all of the charts as far as the indexes go, the total market, the S&P 500, and the Qs. Now again, the Qs has a double inverse, and there are others. These are just ones I'm familiar with. This is the ProShares double short. It is QID. And again, when the Qs is going down, the QID is going up. It's an ultra short. It goes up twice what the Qs goes down. So again, there are ways for sophisticated traders, investors, to find ways to make money when the market is going down. People call that shorting. And again, something for you to practice. You don't have to, but it's some kind of knowledge for you to have. And it's good knowledge to have, particularly if the market's crashing all over. Why in the world would you not want to be able to make successful virtual trades instead of just staying out of the market? So think about it. All right, lastly, we're going to go to gold. Now remember, gold has been a confirmed up move on the 2-day chart since the 2nd of May. The derivative oscillator had gained energy, and what we've really seen, if we look at our candlesticks, we see that the market hit a high back on the 2nd of May and has really done nothing but slide sideways since then. Our Hikinashi candlesticks show us no great upward momentum. The 2-day trend line was breached back on the 10th of May. Now, if we look intraday, what do we see on the 4-hour chart? We see the 4-hour chart has already gone down. It is trying to correct and cross over going up. That hasn't happened yet. If indeed that does occur, might give you a jumping in point to get in on an up trade on gold. The only caveat and concern with gold is the movement on the 2-day chart is not what I would call a strong movement, but it could bounce off and really start diverging. That is the blue MACD line from the red signal line. Just have to wait and watch and see what the charts tell us, right? Okay, any more questions, concerns, issues? want you to go to chartingwealth.com. You can email us right from there. You can also sign up for our daily newsletter that we send out every day the market's open, which includes this podcast. In addition to that, you can also, when you sign up for our daily newsletter, you will receive our weekly review and forecast. You'll also get how to read a stock chart, the link to the video, plus the link to the type of layout that we use at freestockcharts.com. All that's available there at the website. You can also follow us on Facebook, Twitter, Instagram, YouTube. We love to hear from you. If you want to help us out and you appreciate what we do, one favor we ask, go to iTunes, subscribe to the podcast, but even more important than that, give us a nice 5-star rating and say something about us and how much you appreciate what we do. Hopefully it is very helpful to you and you are learning how to read a stock chart. Because once you know how to read a stock chart, my friends, you are so empowered in the marketplace. Start learning today. Thanks so much from chartingwealth.com.